I'm Sarah, a tutor with Accountancy Learning, and in this video I'm going to take you through the tax processes for business, AAT Sample Paper 1, Task 2. Now this task is going to be about calculating and accounting for VAT. So let's have a look at our first question. Tiffany is a trainee at a firm of accountants and she would like some help understanding VAT. So part A then. Complete the following statements to assist Tiffany. The goods bought by a business and the expenses are called, and then we've got a little drop down here to choose our answer from. So we're talking about the goods that are bought by a business and what they're actually going to be called. So, and expenses incurred. So be careful with this question because the normal thought process would be automatically to jump to thinking about VAT because that's the exam that you're doing, that's the type of paper. However, this question isn't actually talking about the tax that's applied. All it's talking about is the goods that have been bought and therefore the expenses incurred and what they're known as. So because the goods are being bought into the business, they're known as our inputs. So anything coming into the business is an input, anything we sell out to customers is an output. So the answer to that question will be input. The second one then is the VAT due on taxable supplies is called. So this time we're talking about VAT. So it's going to be one of the two tax options in the drop down. And we're talking about taxable supplies. So a business's taxable supplies, what does the business supply? So if we're supplying something, we're going out to a customer. So therefore it would be the output tax. We're selling out to customers. It's known as the output tax. The next question then is all about calculating VAT at the standard rate on net and gross amounts. And we're given two invoices here. And for invoice A, we are asked to calculate the VAT using the net value. And for invoice B, we have to use the gross value. Now, bear in mind here that in the exam, these two figures here, they will auto-calculate when you put the VAT figure in. So let's have a look at invoice A. So we are given the net amount of £125.20p. So we have to add 20% on to the net amount. So on your calculator, you can either multiply it by 20%, or if you prefer, you can multiply it by 0.2. That's the same. That would then give you £25.04, which would be the VAT figure. For invoice B though, we have to use our gross figure, which is £227.88. So that figure already includes the VAT at 20%. So this figure is equal to 120%. So the two ways of calculating it depends on whether you prefer decimals or not. You can either divide it by 120 and then multiply it by your 20%. So you're working out that VAT. So you work out what 1% is and then what 20% is. Or if you prefer decimals, you can divide it by 1.2 and multiply it by 0.2. And both of those give you 37.98, and that's your VAT amount. One thing just to pick up with this question is always at the end of your questions, just go back and check whether you're given any specific formatting requirements. So here it's round down to the nearest penny. So make sure that you are aware of what the question is asking for, not just at the start, but check at the end, have I given it to the right decimal places? Part C then. So Tiffany has some queries about VAT invoices, and we have to identify whether the statements below are true or false. So we're talking about VAT invoices. So the first one is a simplified invoice is issued by suppliers who are not registered for VAT. Well, only VAT registered businesses can issue VAT invoices. So a simplified invoice can only be registered, can only be sent by VAT registered businesses. So this one would be false. The second one then, a VAT invoice is not required for invoices containing exempt supplies only. So remember, exempt means that no VAT is applied. So it's not zero rated, it's not standard rated, it's not reduced rated, it's exempt. So no VAT is applied. So therefore a VAT invoice is not required. So that would be true. So as we move on then, we're told that Tiffany is assisting with a VAT return for a client, Martin Shah. She's asked for help to identify tax points. And then we're given some information about a particular purchase. So a customer of Martin's placed an order on the 4th of May. The customer paid a deposit on the 11th of May, and the goods were delivered to the customer on the 14th of May, and an invoice was issued on the 19th of May. And the balance was paid on the 31st of May. So we now need to identify the tax point for the deposit. So what we're going to do for this one is we are going to have a look at our reference material. Reference material 9 will help us with this question. So the tax point is usually the dispatch date unless payment is received earlier. So we were told in the question that the goods were dispatched on the 14th of May, but we're talking about the deposit here. So that was paid on the 11th of May. So because payment has been made earlier, it means that our tax point for the deposit is the 11th of May. Then we need to identify the tax point for the balance. So again, it's usually the dispatch date, which, as we said before, was the 14th of May. And the invoice date is the 19th of May. Now, the thing to look out for here is the actual tax point date may be later than the dispatch date if the invoice is issued within 14 days of dispatch or the service being provided. So because our dispatch is the 14th of May and we issue on the 19th of May, it means the tax point for the balance is going to be the 19th of May because it's been issued within 14 days of dispatch or service.